with part two, right? So we're gonna talk about swing lows. You know, part one or day one was we was talking about high highs and high lows. Now we're gonna talk about swing highs and swing lows, right? And the importance of swing highs and swing lows, right? Where higher highs and higher lows could just be a part of a push, right? Swing highs and swing lows are on a bigger scale, are done on a bigger scale, and you can squeeze more money, more pips, more points out of the market during a swing high and a swing low, right? All right, so um, let's mark off. Okay, yeah. So let's say we have. Okay, no, scratch that. So let's say we have prices going. Wait, why is this yellow? All right, let me change the color first. Black. Okay. So let's say price is making higher highs, higher lows, higher highs, higher lows, right? So on and so forth, right? This could just be a push, right? This could just be a push in the market where showing bullish structure, uptrend structure, high highs, higher lows, right? Um so let's say the push is done, right? And now price wants to retrace, pull back, whatever term you want to use. So price would do something like this: break structure, break a resistance, break a support, and now it'll start making lower lows and lower highs, lower lows and lower highs, right? But the entry, the base of the structure will be this first higher low point, this higher low point, the first point A of a fib, right? So we always track the counter trend on a fib from point A to point B, right? So it'll be point A to point B, and this will be the retrace, right? So a retrace is just a trend on a smaller time frame, right? So that's it. So in that essence, right, this will be the push, this will be the retrace, right? So price can retrace all the way as long as it does not break the entry base, right? So if I pull back the fib, right, I usually have it off, but if we go to the settings, we have -1, right? So -1.1 is a break of the structure. So now you will break the whole structure. It's one thing to break a trend, but it's one thing to break structure. And this will be breaking the complete structure, right? And of course, we'll go into live charting to be able to see the difference and be able to tell the difference, right? So let's actually get into that now, right? Let's try to find a chart that's like simple. Let's see. JPY. Let's see something like this. Okay. Was this an easy? Can I say this was easy? Nah. Let's go. I don't know, man. What's like a simple GP CAD, USD CAD? Okay, could probably use USD CAD, but I'm gonna use something else to extend out window. Then I'll mark up this too. Okay, all right. So on the daily time frame, right? Let's go out to the weekly so we can get less data. So on the daily time frame, right? This will be a break of resistance to continue the uptrend, right? So we have. This is consolidation, but you could use the last bullish candle wick of the break of structure to the, so it's bullish to bullish, right? So bullish candle to bullish candle wick, bullish wick to bullish wick, right? So like we explained, price is currently sitting at 88.6. As long as it does not break the 100%, then the structure is still good for a downtrend, right? But if we go on smaller time frames, such as, let's go to H4 so we can get more details, right? So we can see that we're having low lows, low highs. Low because it's the same low. Let's mark it off so you guys can understand. So we have lower, no, this is actually the low low. So this is the lower swing high, and that's crazy, right? So, okay, let's get into that another time. Let's just go with simple structure. Lower low, lower high. Low because it's the same low. This is consolidation. Price went up to make a lower high because it's lower than this high. And then we have a lower low, lower high, and so on and so forth, right? So we have this minor trend on a smaller time frame. It's H4, so it's still a big time frame, but it's just a small time frame compared to weekly, right? So we have lower lows and lower highs, right? So now within price, the max retrace that price can retrace without breaking the structure is 100%. So around this area, we may look for price to shift structure, right? So being that we have a lower low here, let's go here. So we have lower low, we have lower high. So now we have lower low again, right? So this could potentially be a lower high, right? We just have to see how price plays out, right? So we can be looking, if this does be a lower high, let's say this is a lower high for video purposes, right? We want to look for something like this. And then structure shifts, right? And then you'll be able to zoom out and start seeing a shift of structure to continue with the main trend with it, which is bullish on the weekly time frame. So time frame correlation does play a part. We could do that in the next video. But in this instance, we are doing swing highs and swing lows, right? So this is the swing high. And if price decides to turn around, this will be the swing higher low because it's higher than the previous low, right? Let's look for another live example, chart example, actually, right? These charts are so sloppy, man. Like, what's up, Trump? I'm pro Trump, by the way. But okay, so we have a swing high, a swing higher low, a swing high, a swing higher low, right? You can see that this swing higher low did not break this swing higher low, and so on and so forth. This one did not break that one, right? So this was just a quick video of swing highs and swing low. I'm gonna find a better example though. This is ugly. I might have to go back all the way in the past. Like, oh my God. Okay, this looks like a clean structure. Low, 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 high, low, 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 high. But this is just low lows. We're looking for swings. Yeah, it's hard to spot swings. I'm not gonna lie. Cat. CHF. Let's just see. I guess I don't know. I'm just making up anything at this point. Okay, so I had this marked up. Okay. How can I verbally say this again so you guys can understand more? I mean, a swing high could just be a higher high on a bigger time frame, right? So let's use sales in this instance, right? So let's use sales for this instance, right? So this can be a swing low, right? This can be a swing high, right? This can be a swing lower high. and this can be a swing lower low, right? So now if we go down on small time frames, okay, so you see how trend, so this was one trend, downtrend. Let's go to H4, yeah. So this was one trend, downtrend. This was one trend, uptrend. So we had downtrend, uptrend, downtrend, consolidation. Let's look for a better chart. USD CHF. Let's see if this chart is clean. Let's go like something like this. Okay. Okay, good. This looks clean, right? Where on the weekly, we have lower low, lower high, lower low, high, because it's the same thing, but this is just consolidation, right? So we'll just stick with this. Lower low, lower high, lower low, low high, right? So if we go down to a smaller time frame, we'll see that this was one trend, this was another trend. Downtrend, uptrend, downtrend, uptrend, downtrend, uptrend, right? So a swing low, right, which is the swing of the whole market, and the swing lower high is just trends, right? So we're gonna say downtrend, as long as it's, so a swing low and a swing high is just trends that support the bigger time frame, right? We could say, yeah, we could word it like that. So this is just a quick video. This is a crazy topic because I got a lot of brain fog or whatever the case may be. But hey, as long as you guys can understand it, it'll, you know, it'll be fine, right? So this was a swing low, a low. This is a swing low, a high, because we had a trend going down and we had a trend going up, but it did not break the previous swing high to keep the trend on a downtrend. If this would have broke this high, if this would have broke this high, then it would have been a shift of structure, right? Because it would have been a whole nother trend in the opposite direction, and it would have broke that structure. But this was a swing lower high, swing lower low, because this low was lower than this low. So on the daily, it looks like that. Well, on H4, we'll have multiple trends within that same realm, right? So we already know that this will be the uptrend: high, 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 low, high, 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 low point, high, 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 low point, high, 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 low point, and so on and so forth, right? We'll be able to see trends, right? So that just made up the swings in the market, right? So this whole trend right here was only valid because, well, not only valid, but this whole trend right here was just making up the low, the swing lower high, right? But that's about it. Quick video, a lot of brain fog. I will come back and do day 3 or part 3, whatever, and we will talk about time frame correlation or something else. I'll find a topic, but time frame correlation will be in the series. So, but yeah, thank you guys for tuning in.